Welcome back everybody into another daily recap. Today is the 24th of August and as always we're going to have a look at what happened during the New York session. First of all, I want to start again looking from the PSA that was charted up yesterday. This even if on the 15 minute doesn't make too much sense. On the 1 minute, this is the price action where not a single 1 minute candle closed above this level, and it's also a PPL exactly on the dot. And that's where this morning I already showed you, that's where the London session faced a huge rejection, going all the way back down from supply down to demand for 95, and we're going to see that with the New York Open even 100 pips. So after that we had the New York Open, the New York session quite messy, as you can see here, up until the New York Stock Exchange opening and the real the news that were coming at exactly during the New York session, there was not a clean price action and direction. So price was facing this huge demand area, but as you can see, it was not being perfectly intact and respected up until, I mean, the bottom, yes, we might say that the bottom had been respected, and but overall it was quite messy, as you can see here. So that's why even as trading ideas, I was not really sure about anything, and we can see that we had these order block being created. This is pre-New York, failing to break below, and also New York Open and the news as well failed to make new higher highs. Price had to go back and really give only trade ideas New York Stock Exchange didn't do anything. The real cleaner price action was with the 10 a.m. candle. As you can see here, we're going to talk about it in a second. So let's start looking at the images. So this is from pre-New York. I was looking at some price action and said, okay, if this demand area is valid, then we're going to see a breakout above these previous highs, breakout and retest, and possible continuation up. So that's why first we saw that the price failed to break immediately. This is the candle after this candle that was highlighting, failed to break, but we had a huge bounce, nice clean bounce from these previous lows. This can possibly be a new higher low, and as you can see, price went like 20 pips above, but with a good number for USD. And let me show you here. These were the numbers. Durable goods were expected. This one were expected much higher. So this one, I think I missed it. That's why. I thought it was good. All these are good for the economy because they were expecting 0.7, 0.3, and then they were expecting much lower numbers, but they came out better. And this one as well. I thought they were, 1.2 is much better than 0. 0.2 is better than 0.2, 0.4 is better than 0.3, but not really much. I think I got a weird bias today, but this one 0 is much worse than previous and also of expected. So that means that there are less orders of durable goods. So that's why I was looking for a bearish bias, and as you can see here, even with this candle these candles failing to break, this was a 30 pips possible trade idea, but the demand area now, it makes much more sense that overall the price was not, I was expecting this volume after failing to break would push the price down with such a good number, but it actually were not that good. And I think I sort of jinxed myself because I was not really clear state mind of what happened. But anyway, let's see what happens. Have a deeper look at what happened at the new 10 a.m. candle. So this is the new 10 a.m. candle open. The first candle fails to break above and makes all the way back down to the demand area, respecting it. As you can see, first or second candle, that's your respect of the area. And let's see if we have a PPL here in the middle. I don't know. No, okay. What is this? We have to think about, okay, what is this? In the new hourly open, the new bearish movement and fail to break. You can even draw a trend line now that I look at it, and that's the break of the trend line, the retest of the trend line. Of course, I don't trade trend lines, but visually it's much cleaner. Okay, what is this? This is nothing but a lower wick in the new hourly candle. So if this is the lower wick, and then you have the price breaking above, you have the new hourly candle will look like this. And as per trade ideas, I want to enter at support. So that was my first setup. I didn't catch it, I didn't see it only afterwards because it was getting too late. It was already after 10 a.m. and I was not expecting much of a price action. But look at this trend line, was pretty nice, but that's my idea. So the lower wick is created, fails to break below the demand area. The demand area is being respected. You can enter at the second candle with like 20 pips stop loss, which covers plenty of space, and you get your 3 to 1 pretty nicely. Afterwards, what happened is that okay, there's a bullish push impulse. What are we looking for? What we have to, and I'm starting doing it. What tool do we use from our skill set and tool set, and even this like is better, that after an impulse can give us a better understanding, the retracement tool. So we put the retracement from here till there, the all bullish impulse, and we see that the retracement went slightly below 50%, but technically, which is more important, it's not just this number that counts, but technically, is this a confirmation? Because is it reacting here in the middle of this area, or is it reacting exactly at the top? And that's your retest, and this could have been your second entry when the pullback is most likely done. And you can see also that the TP is matching exactly the supply area. So you mean that, okay, we are riding these buys from demand. Let me remove this from the demand with these buys all the way back to supply. Pullback buys at support, and buys at pullback in continuation down. Here, I will not be looking for buys anymore, not even above here, because we are close to another supply area. I will be looking for respect and then pullback, sell, pullback, sell. That's your trade idea. I'm looking at them right now, and it matches my usual what I want to see in the charts. So these were clean 120 pips, new hour lower wick, respecting the demand area, buys, pullback 50%, and most importantly, retesting the PSA, 60 pips, 120 pips, very clean in an hour. So that's pretty much it. And now that I look at it, okay, what is happening now? This is our supply area. This is our 15-minute. Look at the 15-minute candle, how it closed. This 15-minute closed huge bearish because this 15-minute failed to stay above the supply area. I'm not saying that you should enter there necessarily, especially if you already had your trades, because price can easily bounce from there and then go back up. But when you have this first confirmation, let me put the PPLs as well. First confirmation, so price is failing to make a new high, and look at this candle, so clean, so perfect, shows you that bearish momentum is still in 25 pips, but doesn't really matter. This is a intraday move. Look at this nice circle, it's so beautiful. And what you see afterwards is the same. You have impulsive move, some movement, of course, that's the price action, price sensitivity area. What are you looking for? From supply, what you're looking is pull, impulse, pullback, sell. You want to look for the sell. You're not looking for buys over there, because this liquidity is coming from a supply area. It's not coming from a random place. And here it's coming from retracement and coming from a demand area. So I will not be looking for sells here. Why? Because these buys are coming from the demand area. So I will not look for sells. I will be looking for buys and buys and buys. The same and the opposite is true here. Sells, pullback, sells. Pullback, failure to make new highs. This is your candle entries. You place your enter, you place your stop loss above the previous price sensitivity area or above the candles. That's even a 15 pips. That gives you a much better risk to reward ratio. You can even go for 45 pips, 45 pips. As you can see, 40 pips we reach all the way back down. So as you can see now, we are reacting at this previous strong area, the one that gave us the retracement before. So that's why it's late, and that's why the price action it's much slower. But here, this, if you entered at the second, not even the first, the second candle confirmation, that would have been from there almost, as you can see how it matches perfectly. This whole move, you of course the same, you can give 15 pips stop loss. Look how big is this anyway, all the way back down. 45 pips is exactly there, 1 2 3, even more, and even the 60 pips is exactly back to the previous demand area, from supply to demand, from demand to supply. That's my trading system, and that's absolutely beautiful, So basically that's it. I hope you guys enjoyed. It's very short and crispy. Buys from demand, buys from retracement, understanding where is the retracement coming from, the 50%, of course placing it correctly, 50%, and most importantly these previous highs, because this is market structure. If you want to see a new, if you are in a downtrend and you want to see a bounce, you want to see the retest of the last high, lower high, to confirm that this is a new higher low, and to confirm that this one is a new higher high. Because if it fails to break, then it's just a continuation down. But if it's supporting it and is a proper retest, even with a couple of candles, then the change in the market structure is complete, from bearish going to bullish. And this is it, guys. I hope you guys enjoyed, and let's see you tomorrow.